Hello everyone. In this video, let us learn partnership deed. It is very important topic. It is nothing but it is agreement. It is an agreement which includes rules and regulations to be followed in business. It is an agreement which includes rules and regulations. Those are followed in business, and each and every rules and regulations read by partners. Partners, and if they accept means they will sign their signed, and later it is stamped. So, partnership deed is nothing but it is an agreement which includes rules and regulations to be followed in business, means partnership firm, and each and every terms are read by partners and they agree and signed, and later it should be stamped. That document we call it as partnership deed. For example, if this is the agreement, a document, in this each and every information will be recorded and those will be read by partners and finally they will sign and later it will be stamped. So this document we call it as what? Partnership deed. Let us see what are the things will be included in partnership deed. It's nothing but contents in partnership deed. What are the information recorded in partnership deed? First one is name and address of firm. Name and address of firm. Then name and address of partners. So business name is recorded and partner's name is recorded, and commencement date of business. Commencement date of business. Capital contribution by each partner. Capital contribution by each partner. Next one, salaries, commission or any other remuneration to be payable to partners. Then profit sharing ratio. Profit sharing ratio, etc. So in, as we know that it is a document, in this document what are the information recorded? So that is nothing but contents of partnership deed. So first one is name and address of firm. So what is the name of your business and where it is located, that is recorded, and name and address of partners, who are all the partners and what is their address, it is recorded, and commencement date, so when your business has started, that will be recorded in that agreement, and each partner how much they have contributed capital, so that also recorded here, and on which basis they are going to share their profit and losses, that is called as profit and loss sharing ratio. And finally, if they are doing extra work, what will be the process, like whether you are going to pay salary, commission, any other remuneration will be mentioned here, and interest on capital, interest on drawings, and interest on partners loan, each and every information will be recorded in this partnership deed, and each one will be read by partners and they will accept that document, we call it as partnership deed. For example, let us take there are two people, one is A and B. So they are best friends. So from childhood they are best friends and together they are going to start a business. Now they are having good friendship and trust is there, so they will start business. And when they are having good trust, they may ignore this partnership deed, means instead of going this process they may start with the trust. So in that time they will not be having any written document or agreement. So in that case, if they are not having partnership deed, so some provisions we need to follow, that is nothing but provisions in absence of partnership deed. So if you are not having partnership deed, so in that case, what are the things we need to consider and how we need to perform some activities? First one is, so if there is any profit or losses, how we need to distribute. For example, A has invested 2 lakh rupees and B has invested 1 lakh rupees, and last year they had a profit of 30,000. Now their profit sharing ratio will be 2:1 on the basis of capital contribution, and they will share this 30,000 in the ratio of 2:1, that is A will get 20,000 and B will get 10,000. So when they are having partnership deed, they can share on the basis of profit sharing ratio. But now we don't have any partnership deed here. In that case, we can't go with any profit sharing ratio. So we need to distribute profit or losses equally. If you are not having partnership deed, you need to share your profit and losses equally. Second one is interest on capital. Interest on capital. For example, so already A has invested 2 lakh rupees. Now he is introducing 50,000 rupees of additional capital. In this time, what will happen if you are having good profits? So business will give interest on this capital. So when you have partnership deed, partner will get interest on their capital. But if you don't have partnership deed, no interest will be paid on the capital. So no interest on capital will be paid. The next one is interest on drawings. Interest on drawings. So we know that drawings are nothing but from the capital invested in business, any partner is withdrawing amount for his personal use. That is important. From the capital, if he is withdrawing for personal use, that amount we call it as drawings. For example, A has invested 2 lakh rupees here. Out of 2 lakhs, he is withdrawing 50,000 rupees for his personal use, own use. Then this 50,000 will become what? Drawings. If he's taking loan from bank, he has to pay interest on this bank loan. Just like that, if he is withdrawing from business also, you need to pay interest on this drawings amount. If we are maintaining partnership deed in the business, so partner has to pay interest on drawings. But if we don't have partnership deed, no interest on drawings will be paid. We can't charge any interest on drawings here. That is next provision. And fourth one is salary, remuneration, or commission, anything. So for example, let us take two partners are there, A and B. A is working 2 hours in a day and B is working 2 hours in a day. For example, both are working 2 hours per day and both are working equally. Then for example, they have invested 1 lakh, 1 lakh each, 1 lakh, 1 lakh each, and both have invested equally and both are working equally. So if there is profit, like let us take 20,000 of profit, each one will share 10,000, 10,000 equally. But in case A is working 2 hours but B is working 6 hours and they have invested equally. Now B is working 4 hours extra. Then for this 4 hours extra, so we need to pay extra amount, that is called as salary. For that extra work, we have to pay salary. If you are having partnership deed, for this extra work, you will get salary. But if you don't have partnership deed, whether you are working equally or extra work you are performing, whatever it is, you will not get any salary, commission or remuneration. First one, profit or losses were irrespective of your capital contribution, equally distributed. Interest on capital will not be paid on your capital amount. Interest on drawings will not be charged on your drawings amount. No salary will be paid for your extra work. And finally, this is important, that is partners loan. Partners loan. Let us take A has invested 2 lakh rupees here, B has invested 1 lakh rupees here. Now business needs further 2 lakh rupees amount. Business is in need of 2 lakh rupees amount, and if it is approaching bank and we will not get any amount from any other source, then what will happen? Partner may provide the 2 lakh rupees. Instead of giving as capital, he may give in the form of loan. So then this 2 lakh rupees, already he has invested 2 lakh rupees, that is considered as his capital. Now he is providing 2 lakh rupees, but it is in the form of loan. Then it is called as partners loan. So if you are having partnership deed, in that we may fix what is the rate of interest on this partners loan. But if we don't have any partnership deed, then it is fixed that 6% per annum will be provided on partners loan. These are the 5 provisions we need to follow. This is all about partnership deed. Thank you.